All right, thanks for being here, everybody. It's Harry Boxer from the Technical Trader. Our website is thetechtrader.com. One of the first trading rooms in the internet back in 2001 was when we started. It's 24 years now. Unfortunately, I've been doing this more than twice as long as that. Or should I say, fortunately, because my experience, I think, is very, very well healed for my traders to be able to learn from. So what we do on our site is we do intraday 1 minute technical trading and swing trading as well for people who obviously can't be in a room all day trading but want to do some swing trading. And so I give out ideas every day, upwards of between 6 and a dozen ideas every day for day trading, and three to four ideas probably a week for swing trading. But we have a free 10-day trial. Please come and join us for free. No credit card necessary. Just come on in, participate. Please make sure that if you're coming in, you participate in the live webinars that we do all day. I basically come in early, 3:30 in the morning, quarter to 4. I'm on the site in LA, and doing my chart analysis for over an hour and a half before I come on and do a live webinar around 8:15 a.m. Eastern time. And I'm on until the opening, basically. And then after the opening, 10 or 15 minutes after we open, I come in with an early look at what the stocks that we picked out are doing and what other stocks may be breaking out or popping or trending or whatever you want to call it. Anyway, so come join us, make some money, and pay for a year's subscription. That's what I've been told a lot of people do in the first couple of weeks. They end up making enough money to pay for even 2 or 3 years of subscription to my site. So try that out and come join us and see what we're all about. And I look forward to seeing you there. Now, David, I want to get my charts up. I need to get to the screen share. Okay. And I'm going to share my chart there. David, do you see my stock charts?
No, I'm still seeing your. Okay, now I see ATEC. Yeah.
Okay, good. That's what I wanted you to see.
Okay, great.
All right. So, folks, I'm here for at your service to give you ideas, but also to take your questions on any symbols you might have. Let's see, David, where I don't see the chat. Usually, there, I got it.
Okay, great.
Yeah. So there's I'm not sure if these are for Sunny or for some other people.
Uh,
Okay, so we'll start out with GILT.
Yeah.
Now, this happens to be just coincidentally an institutional favorite of mine. I have an institution that's been along this stock since about 6, who swears it's a $20, $35 stock. And but when I saw the breakout here, with an increase in volume, the best volume we've seen in months, through a key resistance level, I bought the first pullback here, and most of my people were long this stock from about 7.25. Today they announced the deal with I think it was Boeing, and the stock spiked, and you can see that it basically moved from 890 to 957. Now this is a 3.5-year high. What I look for is long base patterns, which this has, a breakout and accelerating volume as well, and good technicals. This has all of it. I believe we're headed to $11 short term. I believe we're heading to 14 on an intermediate term basis. So there's a 50% gain coming up in the next few weeks and months. But more importantly, it might very well do one of these, like it did in 21, and make a higher move into the high teens, even low 20s. Something to keep an eye on. GILT. Palantir, and that idea comes from, it looks like Sunny. Is that right? Sunny, by the way, nice to hear your voice again. Sunny and I know each other. We go back a ways. Palantir, to me, at this point, is dangerous. Now, when I say dangerous, I mean anytime a stock that's had this big a move, and I mean monster move, that took it from mid-single digits to near 200, 190. But more importantly, it rolled over hard. Now, it may be short-term oversold, and therefore the bounce we got. This is it's left a tail right here on the trend line. Usually that will accelerate a little bit and get back up to what I think might be a trade to about 168. But be careful, because at any moment, if this market tanks, this is going to go with it. I think eventually, if it fails in this zone and takes out the low, that would be key for me. On the 142, I would suspect to see a move down about 130, 35 range, maybe even less than that. It might be in the 120 range at some point, right there. So I'm bearish on Palantir, but I would say that after 6 days, 7 days in a row down, and you got to bounce today. By the way, that bounce didn't even close positive. I follow PLT, the ETFs. I think PLTD that might be one to take a look at. Note that Palantir Bear ETF has gone from 666 to 870 just in the last week, up every day, and it's pulled back. So if you're going to be bearish on Palantir and you want an instrument that can make you some money, you don't have to spend a lot of money. It's like $160 for Palantir. You can buy the ETF, which is only $8 a share. Now the resistance on it on Palantir is about 870. I would look for at least a move to test that. Should it take 870 out, I think you're headed back up towards near 10, 990, 10 range up there. Would be my target for an extension. And if it pulls back, your support is around 7.5. Sonny, I hope that answers your question. And yep, she says right. She agrees. Harmony Biosciences. Look, when you look at this chart, it goes and you go back 3 years, you'll see nothing but a sideways basing type pattern. Now, it isn't a bad one. It's a bullish setup, but it hasn't broken out. And until this stock makes it over 41, 41 and a half up in that zone, and that would be my target, then I'd be careful about a failure in that area where there's key multi-year resistance. Should it take that out, however, we might have a move that could equate to 50 or even 58 up in that zone. But I wouldn't anticipate that. I would wait for a breakout. And right now, I would keep a tight stop under the trend line or the moving average, right? The 50-period moving average, which it should try to hold. But you'll notice that it broke it here and it broke it there. So the likelihood of it breaking again and making a run down to test 34 in that area is a possibility. But right now, the trend is your friend. And the actual trend on this one looks pretty good to me. If it breaks out above this line, it should test the key overhead resistance. And on a longer term basis, it's based on the width of the base. About 16 points would get you to about 55, 56, my take. Up around there. Now that's a more of an intermediate to longer term move, but that's what I'm looking at. Nice base pattern. I'll leave it at that. Now, the question on SoFi, which I think was Sonny had as well. Here's my take. SoFi is a tech trader swing, long. This left shoulder head and a weak right shoulder or V bottom with a right hand extended platform broke out right there. We went long. Not sure what day it was, but it was back in this area. It broke out above for 15 and a half. It just kept running. Within a month, it was 22 3/4, a 50% gain. It pulled back and popped. My big problem with this one was this left an island reversal. And then another one. You rarely see two island reversals in a 3-day span. So I was looking for this to drop. It did not. Instead, it retested the high. However, now it's a double, triple top. And unless this thing gets over 25 with energy, I'd be careful. Do I think it might do that? I do. I think today's action was very bullish. I want to point out, though, there's 2 days on the downside. The volume was heavier than the one rally day today. Always a bad sign. So let's go to an hourly chart. I want to show you something. Could this be a left shoulder, a head, right shoulder? It's not that kind of a pattern. But I will tell you this. Underneath this zone, in my opinion, if you take out, say, 21, the stock could get hurt. Only because it's showing signs of weakness, along with the market, of course. However, I would not go short on any stock that's in a key uptrend, and it looks like this. Perfect parallel rising channel. And from an Elliott wave standpoint, it's a 1, 2, 3, 4-wave move. This does look like potentially a bull coil. And should it take that out, I would look for 30, probably 32. That's my target on this one, on SoFi. But it's going to have to show me it could break out above 25 first with volume. we have a question from Jam Pollock. Rhythm. I like this company. This was a tech trader swing for a while back in here when it broke out. And if you take a look at the breakaway gap on this one, I'm going to go back a long ways and give you what looks like a big, long rising channel. Now, recently from the April low, it did a 1, 2, 3, and 4, and maybe the fifth wave. If the fifth wave goes, my experience is when a fifth wave takes out a channel top, especially a major one, it can spike. Wouldn't be shocked to see Rhythm go to 115, 20, 25 up in that zone. But anything that's that long in the tooth, in the last couple of years has gone from 13 to 100 and changed. You got to be careful. Near term, very near term, if you look at an hourly chart, I would draw a line under here and set my stop under 94 for sure. Don't let it get down below that because that breaks the whole trend and you're vulnerable into the mid 80s. So if there's anyone else with a question, please throw a symbol out. In the meantime, I'm going to show you some stocks that I am short on and long on. Here is a list of box of shorts that we have, a few of which are the tech trader swing trade short. Now, Roblox everybody loves. I don't. Of course, it's a beautiful chart. Check out this island reversal. A blowout and then a gap down. Then a consolidation and then a drop down on a gap to the moving averages. It spent a week here trying to hold a 50. Do yourself a favor. Under 112, go short for move to 180. That's my take where I think this stock can go. Let's not forget how far up it came. Lots of room to drop. Roblox short. Now, it's a market popular stock, so you're going to have to cover on any move, say over 121 and a half. And I want to get it out of this pattern. If it breaks out, it can get squeezed and run. I went short MNDY today. And I was contemplating going short for a week now. Look at this long-term chart. And look at that left shoulder, head, right shoulder type pattern. Big year-long topping pattern. Massive breakaway gap to the downside, followed by right now, that would be a bear coil that broke today. Now, it didn't close weekly. I wanted to see a weaker close. Nevertheless, though, I think this is cooked. I also think the possibilities, if we get any kind of market drop, this could be 145, even 125. Currently 171. Pretty interesting potential short, MNDY. I have a question here on MU, so let me interrupt myself. Micron, nice chart overall. Like most tech stocks, bottomed in April at 61 and a half, and over a 60-day span, ripped to 129 and doubled. What did it do? It got up to this gap back in here and double top. Now, if it gets through it, most assuredly, if the tech stocks go and the semiconductor stocks lead, which they often do, up or down. But if we see it break out through the double top of 128 and a half in that range, we're probably headed to 150. That's my take. Maybe a stop at 136.7. My targets are 136.7 and 149.50. But, and this is a big but. No, not Kim Kardashian. This is a, you can see that the double top here is at the moving averages. Any further damage, we're likely to retest a low. 103.38. That's a 12-point drop from here. That could easily happen. If the market comes down, I think this will do that. If it doesn't, we have to play this on its own. But there's another gap down here that troubles me. That has to be tested. It may even be filled down at 91.2 zone. My targets are 103 or 92.3 if the market continues weak here. If it does break out above the double top, then we're in business for a move, as I said, to 136 and 149.50. Excuse me. See you, Sonny. If anyone else has a question, please feel free to throw the questions out, and I'll be glad to answer your questions. Let's do some longs. Currently, my traders are long AIRO. Recent IPO, exploded day one, came down in a wedge, popped hard. You can see how thin this is. This ran from basically literally went from 2087 to 2920 a day and a half. That's the way the stock can run. It then had a falling wedge and popped out. It recently came out with a really good report, earnings report. And all I'm waiting for now is for this to get through 2420. Then I'm looking for back up to 2930. Keep an eye on this stock for a big pop and a move AIRO. Again, folks, please put a symbol up. Be glad to answer your questions about any stocks that you have an interest in. I've been long TIGO for a while. Look at this chart. By the way, Mark Chaikin is also very high in the stock, and he's an excellent guy who is able to spot long-term movers. I believe the stock is headed for 60. It's 45 right now. Back on the short side, SEZL. Look at this big move. Massive 1, 2, 3, 4, 5. Massive rollover and breakaway gap to the downside right there. Now a bear flag. This stock here breaks this bear flag. It's probably headed to 73 and 66. Currently trading at 88. I have some more questions. Let me get back to them. PJT. PJT Partners, a capital markets financial firm. Nice chart. There's no question what I would do with this stock. 100% stop under 171.2 zone. And it's right there. If it breaks, it can break hard. If you're short, good for you. If you're long, you better be careful. If it breaks out of the trading range, I can see a move into the 195-200 range. But right now, big resistance up here. And some easy downside, in my opinion. 158, 146 type targets. All right, Anton. And now Excel. This is bearish. This is on my box of shorts list. I'll tell you why. Anytime you have a bullish chart and a trend like this, look at the start. It started down at 15. It moved up nicely, then it accelerated the channel. And it did a 1, 2, 3, 4, 5-way move. And then it retested and retested. 3 times failing at around 50. 49, 50 range. Breakaway gap and a bear flag, period. And time you better be short this stock, otherwise you're going to have a problem. Really be careful with this. I can project that if it breaks this bear flag, it's probably headed to 32.5, a 6-point down. And if it really gets ugly, it may fill the gap down here to 29.30. Yeah, I don't like to break down in technicals as well. This tells me the stock should be shorted. Matter of fact, I just added it to my box of shorts list. Anybody else with a question? We have Anton wants to know about. Let me answer a question here. Harry, do you have scans you use to find your bullish bearish watch list? Actually, no. I don't use the computer scans. I spend a lot of time visually going through charts because that's the way I like to do it. I'm a pattern recognition and photographic memory guy. So all I have to do is look at a chart and no, I don't need to scan it. But doesn't mean that's only because I'm old school and I like doing it a certain way. And I don't mind spending the time because I love charting and I love technical analysis. And I've written a book called Profitable Day and Swing Trading, which you should try to get a hold of, although it's currently out of print. We're going to be reprinting it. Okay, SKYW. An airline? Well, that was a massive violent reversal there. Look what it did too. Now, when a stock's in an uptrend, the trend is your friend. The way I draw a channel is not off the spike low. Tom DeMark once taught me that the best way to find the true channel is the first pullback and the second pullback. You notice that channel there. So let's just say that if I'm a stockholder in SkyWest 100% stop under 109. Where's the target? 126.7. We got that. Anton. And Jam Pollack, AIG, the insurance company. Well, American National Group, been around forever. Let's take a long-term look. Right on the long-term trend line. So in addition to that, keep in mind that the April low and the current low are in the same range. 100% stop under 75. As a matter of fact, based on the weak technicals I see on this rally, I would probably, I mean, you don't need to exit anything that's moved up back up above the moving averages. But for sure, I will bet you that if it gets anywhere near that range, up around 86.7, it's going to do so weakly. If it does, I would exit. If it breaks out with energy, 93.4 is your target. Phil. Hey there, Phil. Thanks for the question. Lope. It's Grand Canyon Education. Great long-term chart. You get better than that? Not much. Perfect 45-degree angle parallel channel. You can expect this to continue if it can get through resistance. Phil, which is right here. Take a look. So this is a key level. Matter of fact, it did just break out today, it looks like, with a bullish engulfing bar, telling me it's probably going to, I would say, 218, 217, 18. If it gets up there, it'll be back up towards the channel top and probably encounter resistance up there. What you don't want to get is a sudden reversal of this beautiful engulfing reversal day and a move back down. So under today's low is where I put my stop, 195-ish. That's where you stop it. Support at the gap at 186.5, and that's your short target if it reverses, followed by 182 area, and then maybe a gap fill 172. But overall, bullish chart, no question. For Mr. Braden again, or maybe it's been anyway, BLSH recently IPO'd. The only way to look at this is on a 15-minute chart, which shows a pop and a big pullback. Everybody got excited about this one, I remember. It didn't pan out, did it? Now, if the downtrend's broken, possibly new uptrends underway. It looks a little like that. The target is 73.4. If you want to trade it, that'd be a place to exit, maybe. Also look at lateral resistance from this low along here. $72, 2.5. So 72.5 to 73.5 is an area where I would trade it out. Also because it's got a 1, 2, 3, 4, and that would be a fifth wave up. If there's anyone else with a question, feel free to post, folks. I'm here at your service. Now, a few more of my swing trades. On the short side, TTMI. Look at this long uptrend, followed by two big down days on heavy volume, followed by a bounce on low volume, followed by more heavy volume on the downside, and a break of what looks like, and they can do it on an hourly basis so you can see it. A massive left shoulder, head, right shoulder. This is a bearish chart. It's headed to 35.6 in my opinion, currently 41. On the long side, XFOR was just put out as a tech trader swing. Long downtrend, taking it from the mid-20s down to literally $1. I think less than that. Low was $1.35. It exploded in a week to $3.45. So it tripled. And for a month and a half, it's been moving sideways. Easy stop at the double bottom here. So you don't want it under 245. And any move above the double top of 342 probably gets you to 4.5 and maybe 5.5. Measured move. We have a couple more symbols. PAYC. Paycom. Phil, I don't like this chart. Oh, wait. It's not a daily chart. Yeah, Phil, I don't like this chart. Look, if you look at the last couple of months with the market being strong and a lot of stocks moving up, here's what this software stock did. Not a good sign. Yeah, unless it pops, today was a reversal off the moving average. Unless it pops, it might be headed down to 207. I'd rather be short than long the stock, quite frankly. A short target is 190. If it pops, the long target is 248.50. Test this spike. For John Loper, SM Energy, oil stock. The oil group looks like shit to me, quite frankly. And this pattern is not what you think it is. You think it's an uptrend. I call it a bear flag. Look at it on a weekly basis. You'll see what I mean. If this, wow, if this is a massive multi-year top, and if it breaks down here, it might make a run towards $10. Not kidding. First stop would be in the mid-teens and then 10. Only if it breaks out over, I would say 32 and change, would I be willing to change my mind. There's that declining 50-day. There's a lateral price resistance there too. So for me, and until I get above this level, this is still bearish. And even then, this declining top sign could rule the day. It's meaning resistance there and resistance there. I don't like the way it's acting, and I'd either avoid or go short. Hope that helps, John. For 65 Wolkert, okay, TLT. That's some bonds, right? Yeah, I don't get it. There's nothing here at all that I would be even remotely interested in until it changes direction. It's been in a downtrend for quite a while. Now, if the Fed lower rates, maybe this gets a pop, but I don't know how anyone can look at this chart and be bullish. Sorry about that. Bearish. Now, how about Urban Outfitters? Now, for a retailer, we're talking all-time highs ever. Okay, as recently as 2022, the stock was trading in mid-teens, and here it is, mid-70s. Five-fold increase in the last 3.5 years. What do I think of it now? Long in the tooth? Yeah. Really long in the tooth. However, if it does accelerate, you might see something in the high 80s, low 90s, even mid 90s. I'm not happy about the overall pattern. The underlying technicals, stocks makes a nominal new high with lower technicals. That's a negative divergence. Slightly, not a big deal, but 100% stop there. You cannot let this go under 65. It's a long way from here. And quite frankly, I'd stop it under 71. Either it works or it doesn't. If it doesn't work and it goes against you, don't sit there hoping. If there's anyone else with a question or comment or even a symbol, of course, feel free. Let's go take a look at some more of my ideas. I think I mentioned Roblox short earlier. Certainly looks like it. GKOS in the biotech sector, medical devices. I've told everybody when it look at the long uptrend. It got creamed, and I mean fast in about 3 weeks. From the rising bear wedge, came down again, formed a long 3-month rising bear wedge, and then broke down. Guess what it's forming now? A bear flag. We break this down, target 77 and 70, and it may even be worse than that. This is a very negative chart. Underlying technicals, not pretty. On the long side, little PGEN has really done well for us. When this stock popped and pulled back and held the 2.5 support. We went long about 2 3/4. Today, it popped from 311 to 389. Volume picked up to 22 million. It broke out of it after the breakaway gap and then a wedge formed. It broke out of the wedge. Don't tell them what they can take this one. Wouldn't be shocked to see it up though around $5. It's 364 right now for you low price traders. And a question from Phil on Fubo. I liked Fubo at one point when it broke out here, but when it broke that support, I stopped it. And 2 months later, it was making lower lows. However, when a stock breaks through a base, you always look at what the top of that base is and the pullback on right to it. After a 1, 2, 3, 4, 5 wave decline, Elliott wave, it bounced to resistance. It tried to get through and backed off. It's awfully sloppy, meaning it was looking great here, but at that point, it probably should be exited. There's support at around 3.25. I would say any lower than that, I'd be out of the stock. It works or it doesn't. In this case, I'm very skeptical about this stock turning negative. So there's no more questions. I'm going to go through a few more charts. On the short side, GLOB is a tech trader swing short. And it has been since it broke down and formed this little wedge in here. From the 104 level, it's dropped down to 65, 67. And it's at the bottom of the channel, so I told my people you can cover down here if you'd like. It might get a snapback to as much as 76 to 80. But on a long-term basis, it looks really bad. It's below everything. I mean, there's no telling how far down they can take this. The only problem I have is anytime a stock could drop from 230 to 67 in 6, 7 months, it's probably time to cover and not be too greedy. Folks, does anybody have a question on any other symbol? Please let me know at this point. Okay, a couple more to go over. CrowdStrike. We're now short. Why? Well, I felt like, looking at the daily chart, of course, that this was kind of a topping pattern, broke down. We went short there at about 450 with a target at 410. It tagged 409.31 yesterday. Next target is 385, 370, and 355. Not sure it gets there, but those are your targets. It's in a downtrend. The one thing to consider is a massive multi-year uptrend as a trend line that comes in around 368. So you may be able to get 45 points out of it on the downside, but expect the possibility of a bounce down there. A couple more in the long. EBS is a tech trader swing short, swing long. Look at the base breakout and beautiful ascending bull coil. That's what that's called. We pop out of here, we're going north. 10.5 and 12 targets. ONDS is a junior little low price stock that we're doing well with. It broke out here, we went long. It ran to my target and pulled back. Currently consolidating in this zone in what we call a bull wedge or flag. That is constructive. If the volume and technicals looking decent, I would say obviously stop under 320. Snapback target will be a retest at 440. And then we're looking at $5, 5.5. We have a question from Jampola Pollock on Tesla. What do I think of Tesla? The other problem with Tesla is it had a nominal breakout last week and then it faded. If it gets below yesterday's low, I would stop at a 314. I think it's vulnerable to 300, 302. We break that, we're looking at 275 again. If the market does a swan dive or a spike down or a selling climax of any kind, tech stocks like Tesla could get hurt. This one's vulnerable, in my opinion. TSLS may be a way to play it, as well as TSLQ. These are bear ETFs. Right now it's kind of negative neutral. I wouldn't say it's something that is terrible. Folks, you have any questions, let me know because we're coming to the end of this. A few more longs and I could finish up here. ATEC is a tech trader long swing. Why? Look at that beautiful base spike breakout flag and moving up. Rising channel says 17 and a half, 3/4, and 20 are my extension targets on ATEC. And Zeta, another long they were long on, broke out, pulled back, we went long. It's backing and filling here. Obviously, a tight stop under 17 would be warranted. The swing targets are 21 and 24. It's the stock we did great with here and that run up. For now, folks, that's a look at some of the longs and shorts that we have at TimingResearch.com. Something I don't usually put out there for non-subscribers, but folks, come into our site, TimingResearch.com. Spend just 10 days free, and you'll see what we're doing and most likely want to be involved. It's a place that's friendly, that's instructive, and a lot of people there are very cordial and mentoring, and I think you'll really enjoy your time there. In any case, look forward to seeing some of you there. And at this point, I'm going to call it good for today. Thanks for being here. Look forward to doing this again. I always love doing Analyze Your Trade for Timing Research. This is Harry Boxer, sometimes called HB. I'm out for now. Talk to you later.